Hello, everyone. Dave Landry here from DaveLandry.com. This is Trading Simplified. So, what are we going to talk about? Well, I want to continue to talk about the methodology in action. I have a mystery chart reveal, and I also have follow up on a mystery chart and some other stuff. And I want to talk about the money management system. And it's a hybrid system. And I'm often asked, is it psychological or statistical? And that'll make a lot of sense in a few minutes. And then I want to treasure hunt for IPOs, which was much more exciting yesterday than it will be today. But I think it's some good stuff, if I say so myself. By the way, housekeeping, I do take requests. It makes my job a lot easier. If I can't fit them into this format, I do a weekly webinar, davelandry.com/webinar. Register even if the date has passed, and you'll have access to the upcoming webinars. And anyway, that format allows me a little bit more freedom, and I can maybe take a little time to answer questions if I can't fit into this venue here. The thing is, if you tell me what you want, it makes my job a lot easier, believe me. If you want the slides from this presentation and all the other presentations, and both my books in PDF format and limited access to members area and a bunch of other stuff, go to davelandry.com/StockCharts. So let's talk about the mystery charts and the methodology in action. This was the mystery chart from the last show. And you can see it was in kind of a gradual, choppy uptrend, but an uptrend nonetheless. It began to accelerate higher, and then it began to pull back. And of course, the big blue arrow was pointing higher. This is a couple of patterns that I trade, or setups, however you want to call it. It's accelerating momentum strategy, and that's when you have a gradual uptrend, not really a tradable uptrend, but an uptrend nonetheless. And then it's followed by acceleration higher, and then a correction. And we're looking to get long on the pullback. So let's follow up on this one. This is BTU, and I'll show you why I'm going to reveal it early. The reason is, as you can see, the stock continued to pull back or sell off, and it did not trigger, so it came off of my radar. No trigger, no trade, and no capital is put into harm's way. You'd be surprised how many times this will keep you out of trouble. The secret of trading is losing as little as possible. And I think the old saying is take care of losses and the winners will take care of themselves. And it's hard to quantify missing a losing trade, but believe me, there's two types of capital, and we're going to get into this one in the money management in a few minutes. But there's the mental capital, and then there's obviously the actual capital of the loss. And it's possible that the next opportunity comes along, you might not be in the right mindset to take it. Now, here's our mystery chart for this week. And right before we went live, I was thinking, well, maybe I should take it out. And it's like, no, I think it's important to show you this because it continues to show the methodology in action. And sometimes no action is just as important as action. So this was all set up. It's a first deep retracement. This is an IPO, and we'll take a look at it in the live chart in a few minutes. But we have an entry at 30.30, a stop at 26.50, and an initial profit target of 34.10. Now, the stock continued to pull back, as you can see, and it almost made about 100% retracement. The idea with the first deep retracement is sometimes IPOs come public. They get a little bit ahead of themselves. You try to say they pull back deeply, and then they just take off like a rocket. In this case, it continued to pull back, and it's almost given up 100% of its trend. Maybe down the road, like one I'm going to show you in a few minutes, it might be worth a shot. But for now, I'm going to avoid. And that was TWKS for those keeping score. And once again, no trigger, no trade, and no capital was put into harm's way. Now, this was what I call not a mystery chart. I recommended it to my clients, and it was still a viable setup. And I was on Dave Keller's Final Bar, and this was my chart, or one of the charts that I brought to the show. Now, this is a pattern I call fly, die, fly. And sometimes in IPOs, they take off, and then they begin to implode, and then they sort of get their act together, or some new interests, I guess is more appropriate. People get interested in the IPO, they bottom out, and then you play a transitional pattern like a bow tie. So in this case, notice the Landry light to the downside. I'm sorry, notice the proper order of the moving averages to the downside. This indicator works just like Landry light if you're familiar with the plugin. Anyway, downtrend proper order means a 10 simple is less than a 20 exponential, and the 20 exponential is less than the 30 exponential. moving averages. And just following this, red, bad, Tarzan speak, as I've said before, green, good, Tarzan speak, you will do a pretty good job of staying on the right side of the market. Obviously, you want to look at the charts and do a few things in addition to just using this as a trend indicator, but it does really help to get you there. Now, anyway, when you see it go from red to green fairly quickly with very little yellow in between, yellow, by the way, is when the moving averages are crossing back and forth, okay? But if you see very little yellow, and then if you look at the chart, you see a bow tie, what looks like a bow tie on the moving averages, then you know that the trend has possibly changed. And again, sometimes these IPOs get a little ahead of themselves, come back in, and then take off nicely after bottoming out. So our entry was here. And then I think I mentioned it a couple days later on the final bar. Here was the actual setup, GHVI. The symbol is now MTTR, FYI. Entry was here, stop was here, initial profit target at 1760. And it had quite a bit of risk, but that's what the chart called for, $2.80, and it's a bow tie. Now remember, when we take on more risk, we trade fewer shares. And by the way, this spreadsheet's also available to anyone who wants it by going to that aforementioned link, davelandry.com/contact. Anyway, so you see, here's the entry, stop, initial profit target, and there's the risk. And if you want to see any of these trades, I'd say 99% of all the mystery charts come straight from my trading service. I put them in here live, but they will eventually become part of the archives. So if you want to go in and see these trades and see what they did, just go to davelandry.com/archives. And I updated those about a week ago, so this should be fairly fresh. Anyway, here was a setup back here. Here was our trigger. Here was our protective stop down below. Here was the initial profit target. Notice it rallied pretty close to that IPT, initial profit target, but didn't quite get there before coming back in. Fortunately, it did not stop us out and then eventually took off. Now, if you go in and watch some older shows, many times I said this is going to be the mother of all don't micromanage examples. And then eventually it did hit that initial profit target. Our stop is brought up immediately to break even when that occurs. The same as the entry, obviously, and then we trail the stop higher. So today, notwithstanding, we're doing pretty good in this one, at least so far, knock on wood. Now, shifting gears to the money management and position management, the question is, should you trade for short-term or longer-term goals? And the answer to that question is yes. I believe that you should be able to reduce your trading system down to a cocktail napkin, kind of like the old Einstein thing, make things as simple as possible. And I firmly believe this. And these are cocktail napkins I actually had made for speaking engagement a while back in San Francisco before this stupid virus was around. And I passed them out. And this is pretty much the methodology in a nutshell. We're looking for an uptrend, and we could use Landry light, we could use bow ties, or my favorite, the big blue arrow, to tell us which way a market is headed. And most of the patterns, except for some IPO stuff, which we'll talk about in a few minutes, involve pullbacks. And then we're waiting for an entry, and that's if and only if the stock begins to rally, or any other market for that matter. Landry light pullbacks to the 30 EMA work pretty good in crypto when crypto is running. Right now, it's not running, by the way. We put in a stop after we trigger. Remember, we just looked at a couple where they didn't trigger, so no capital was put in harm's way. But if we do trigger in, we put in a stop just in case we're wrong. And we're wrong more often than I would like to be, obviously. And then we look for that initial profit target and trail the stop higher, just like the example I showed you in the MTTR. Here's a current example, and the reason I like this one so much is everything kind of played out fairly quickly. You could see it had a pretty good uptrend. It triggered an entry around 11, and we put in a stop again because we could be wrong on any trade. Even the Grand Poobah could be wrong, right? Fortunately, we hit the IPT, and then we put in a trailing stop. So just like the cocktail napkin, this is exactly what I do, 90% of what I do probably. And the rest of it is just a little bit of a few ancillary things like the IPO breakout patterns, and occasionally in something like crypto when the market's running, I'll trade the relative strength by the strongest pairs and then sell them out as they weaken, and also take initial profit targets there. Now, with that in mind, I'm often asked, is your money management psychological or statistical? And to that, my answer is also yes. Now, here's Maslow's hierarchy of needs, not to go all freshman psychology on you or anything. Oh, wait, there's something missing here. Hang on one second. Let me fix this. All right, sorry about that. There's one missing here. Here we go. Okay, so the shorter term trading or the swing trade portion, and remember, we're looking. If you go back and watch the money management shows we've done, we're looking for a 1% gain on the overall portfolio. That might be a 10% gain in an individual stock, or maybe even a bigger gain in something that might be a little bit more volatile. But we're looking for that 1% gain overall on the portfolio. And hopefully, like that A-lit example, I know you should never say hope in this business, but hopefully we're able to get that small profit off fairly quickly. And then we hang on for hopefully, and there's that word again, I know, but hopefully a longer term trade. And that kind of moves you a little bit higher up the Maslow's hierarchy of needs. And so down towards the bottom of the ladder, as you know, it's these physiological needs. You need some air, you need some water, you need some Wi-Fi, obviously. You need some food, and then you need some shelter and all these other things. And in a variety of ways, the swing trade portion helps to fill those needs. And then as you rise further up to the self actualization, the longer term trend trades, and we're going to look at a couple of these in just one second in the spreadsheet. I know you can't wait, right? It's going to make a lot more sense. But if you think about it, the swing trade portion kind of helps to keep the lights on, and your longer term growth is going to be in those trend trades. Now, we live in this microwave society, and I talked a little bit about this last week in the week of charts, but I know it's first world problem, so you probably shouldn't feel too bad for me. But we built a brand new house. Never had a brand new house in my life, and it's pretty nice. I have to say, especially having everything new. But the microwave sucks. We didn't do any research on a microwave whatsoever. We just like, yeah, just stick a microwave under the cabinet and whatever you pick is fine. They're all the same, right? Well, a microwave sucks. It's like takes forever to heat the stuff up. And it's like we're so accustomed in this society to this instant gratification that I think that having a money management, a hybrid approach, trading for both shorter term and longer term gains allows you to fill, again, not to get into freshman psychology, some of those shorter term needs, and the fact that we live in this so-called microwave society where we have to, or we crave this instant satisfaction. So let's take a look at the spreadsheet. I know you probably want to party with me. But here you can see the swing trades, and you can notice the number is close to 1%. And this is on a hypothetical $100,000 account. I do take these actual trades, and I do take them across multiple accounts. But to keep the math easy, I use a $100,000 hypothetical account. And since it's for educational purposes only, we keep it hypothetical. And you can see the swing trades are kind of nice because you get those profits fairly quickly, and they're okay. And like I said earlier, they're going to vary a little bit percentage wise. Like this was 20%, this one was 15%, this one turned out to be about 20% also. The real money is in those potential longer term trend trades. So this one's a fine example. It stopped out at nearly a 500% gain, and this is 22,238. And on a 100K account, all you need is one or two of these a year, provided that you're practicing proper money management and being selective on the remainder of your trades. You could actually have a pretty good year. Here's another one down here, 7,000. And then this one's kind of just getting started at about $2,000. And this was a couple of months ago. I wanted to show you this sheet because the CPE had stopped out on that day for a really nice gain. We got in down around $7 a share, and we were exiting around $42 a share. Now, fast forward to today, and we actually still have a few of these positions on. In fact, that APG was put on last summer, as you can see, and then the ASO was last fall, ARLP last January, and so on and so forth. But you can see the ones that are still on are right here. And if we go back to the spreadsheet, and I just grabbed all the numbers, we were down $972 in total on MTTR, and that actually turned to a positive. The swing trade plus the remainder, today maybe not quite as good, but if you add all the changes up, you can see that there was another $10,000 gain from that prior spreadsheet. Now, they might have had some losses in between, but the point is sticking with these stocks longer term, an extra 2 months on this one, and an extra, well, I guess an extra 2 months on all of these. So far, so good. Knock on wood. Hurts my head. You had a pretty decent gain. And again, it's helping you get a little further up that ladder and fulfilling those needs. So you're climbing the ladder with those longer term gains, and that's a nice little change. And then swing trades again are nice too, and that fills those shorter term needs. So statistical versus psychological. Well, statistics are pretty much worthless, and I think 75.8% of all people know that. But with the longer term trend trading, you're only going to be right about 23% of the time. And that number comes from way back in, I'm going to date myself here, probably 94, 93, 92, 95, somewhere around that time. I was doing a heck of a lot of mechanical testing. And then it was kind of a shocker to see that you only really did okay with these longer term trades about 23% of the time. So that means like 77% of the time, you're going to be losing money if you're only trading for longer term trades. Because somebody recently, they saw that the performance was really good in the portfolio. They're like, Dave, why don't we just trade for 100% of the portfolio and not take these profits? So, well, that's why, because you're going to be wrong probably 77% of the time. So for me to kind of have my cake and eat it too, I had to come up with a hybrid way of doing some money management. And some of this kind of dates back to the mid 90s when I was on Trade Hard. And then after that, it became Trading Markets and all. And some of the money management comes from Larry Connor. So some of you have asked me, is it similar to his stuff? And it's like, yeah, in that aspect, it is. I know he did a lot of reversion to the mean stuff, but that's the methodology. The money management, some of that comes from Larry. Anyway, it's impossible to quantify the exacts. And if people say, like, exactly how much can I make trading? And it's like, I don't know. It depends on the market conditions and a lot of other factors. And if you could quantify things, then you'd own the world. And casinos have a very small edge, for instance, on certain particular games, but they know that over time they're going to get that edge, and it's a multi-trillion-dollar business. And trading, unfortunately, you can't quantify what to expect. Somebody came in recently, for instance, in a trading service, and they probably thought I was a big dud because they were like, well, I can't make any money. Every position I took went sour. It's like, well, and I looked at it, and he did come in at a bad time. He came in right after 8 weeks of pretty darn good gains, open and close position. And then he missed the 500% trade, obviously, because that was last year. Okay. But it just stopped out recently, right before he came in. And then right after he left, everything sort of began to take off, as Murphy would have it. So you do have to give yourself some time. And it's really hard to quantify things in terms of exacts. Now let's shift gears and talk about IPO treasure hunting. And I was really excited about this yesterday. And then, of course, today the market tanks. Now, I've shown this slide before. This is my tool cart back before it got really messy again. Somebody's like, too much mess. Somebody from Italy was like, it's like, that's actually clean. But the point I'm trying to make is I use a lot of tools in my business, just like I use a lot of tools, and there's different tools you want to use for different projects. You don't want to use your hammers as pliers or your pliers as hammers, whatever the case may be. So I do use a lot of tools, and the people at StockCharts have been very accommodating to me. And as I show them more and more what I do, they are able to provide me with more and more tools and show me how to do it with the StockCharts platform. So shifting gears over to StockCharts, if you come over to Charts and Tools and scroll down to about the middle of the page, you'll see IPO listings. And I'm proud to say that because of me, we now have these IPOs on StockCharts. People at StockCharts have been very accommodating. We're able to provide me with this list, which is very nice. Anyway, you could save that to a list. I've already done that. If we take a look at some of these in no particular order, you could see that here's one right here. Notice day one, it came public and it died out. You really want to pay attention to that day one high. And as a general statement, don't even consider an IPO unless that day one high gets taken out. There's some other caveats, which I'll show you as we go through a few of these. Now, this doesn't mean that this one can't bottom out and eventually be worthwhile, something like the MTTR, but for now, you just want to leave it alone. And here's another example, just randomly. Notice that day one set the high, and that was pretty much it. So there's nothing to do there. This one looks fantastic. In fact, I'm re-recording this segment due to a technical issue. And if we were recording this live, I would actually say this would be the mystery chart for this week. In fact, I actually recommended it to my clients. This is a good looking stock. As you can see, nice uptrend and tack, and then nice little pullback, and a little bit of a TKO type of move here. Once IPOs become established, you can then just trade them like the core methodology. There are quite a few caveats as far as trading them when they're brand new, and I'll flesh out a few of those things. Now, what I have over here is I sort them, I have them sorted by volume, and you can't see it on your screen, but I have a drawer pulled up here, and then they're sorted by volume. So here's DATS. I'm actually long this particular one. I have a pattern called buy at B, which we talked about before. 1, 2, 3, 4, 5. The buy would have been on this day, but since it was less than $5 a share, two rules for IPOs as far as price and these pioneer patterns, such as the buy at B, meaning that you're getting in really, really early. And I call them pioneers because, like the American pioneers, you're either going to get the gold or you're going to get the arrows in your back. But the chance of the gold makes it all worthwhile. Anyway, day 5 was, let's see, 1, 2, 3, 4, 5 was here. I didn't like that it was less than $5, but the next day it began to kind of take off it here. And this is what I call buy at B plus 1. Buy at B would have been entering this day here, okay? Anyway, entered somewhere in here, wrote it up, took partial profits. It pulled back in here. It was a setup on my trading service. Actually triggered, hit the initial profit target within a few days, but then unfortunately came back in and stopped out. I do have some shares left over in this one, though, full disclosure, and so far so good on that one. My apologies to my clients who got stopped out on the core methodology setup. So as we go through these, let's flesh out a few of the things that I look for with IPOs, and we'll revisit this over time. Here's one had a nice little run up, a little bit of a pullback. It had an okay run here. You may have gotten in with a little money management. This was actually on my Landry lists a few weeks back. With a little money management, you could have gotten maybe a decent little profit out and then stopped out and remained for a better than a poke in the eye sort of trade. Here's one, came public and died. Right here, day 1 sets a high for the week. If you don't do anything, do two things. One, pay attention to the day 1 high, okay? Make sure that does not set the all-time high for the IPO. And number 2, wait until at least the close of the 5th day before looking to trade them. Now, I do have a rule as far as minimum price, as I just said, is $5 usually. And then maximum price for the pioneer patterns, not the core methodology patterns like TKOs and bow ties and things like that. But for the pioneer patterns, I usually like them to be below $30 a share. So in this particular case, let's see, 1, 2, 3, 4, day 5. Notice it's above $70. So this would have been the earliest I would consider it. But the fact that it just kind of pulled back and kept pulling back, I would leave it alone unless it bottoms out and makes like a bow tie or something down the road. Let's keep going through these. So this one's brand new. Day 1, day 2, day 3, day 4, day 5. It's above $30 a share. So I would just leave it alone for now. And you'd be surprised how many of them will set the high within the first 5 days of trading and never revisit that high. So don't get too caught up in IPOs. And ironically, this one toast is toast so far. Day 1 high, right? Hasn't taken that out, and it's just beginning to die out in here, as you can see. So nothing needs to be done with that one. Now here's one's a little interesting. Ran up in here, has begun to pull back. So this one might be worth putting on your radar. This one, let's see, 1, 2, 3 days in, so 4 and 5 we consider it. So it would actually have to close above this high, at least for now, unless it takes out the high today, okay? And then it would be a new closing high for the buy at B. And I'll see if we can find you one of those that triggered Okay, day 1, day 2, day 3. Okay. Nothing to do here. Day 4, day 5. It never did close above the first 5 days of trading, or at least in the fifth day of trading, close above the highest close. So there's nothing to do. It's just dying out. Now, in order to make money trading, you have to figure out how not to lose as much money as possible. And avoiding these IPOs that just come public and die saves you a lot of money, prevents you from putting capital into harm's way. Now, this one looks pretty good. It's ran up for a while, but now it's lost some steam. Notice it's about $80. And if you go back in time a few months, it was also at $80. So I would leave that one alone. This one's only 3 days in. So 2 more days, and we'll have to decide whether or not it's worth trading. If it closes a new closing high, it might be worthwhile. Here's another one. Let's see. 1, 2, 3, 4, 5. Okay. It's above $30 a share. So I actually would not look to buy this one on a new closing high, but rather wait for a pullback or one of my other patterns. And so far, it has begun to die out. So there's no action that needs to be taken there. Look, once again, day 1 sets a high, and it just kind of implodes it here. So again, no capital needs to be put into harm's way. Same thing with this one. Day 1 sets a high, begins to implode. Now, this one's a little interesting. Day 1 set the high, it imploded, it bottomed out, and then it began to take off. Fortunately, this one big bar here, that would make me a little suspect of this. Sometimes you get what's called a bottle rocket pattern, where stocks just go straight up on one day and then come right back in. And so far, it's done that. So I actually would not take that trade. I am long this one. This was recommended in the service. It's a little unorthodox, but if you look, it's sort of a cup and handle. Nice little pullback in here. And so far, it's not really working out so well. Here's another case. Okay, you avoid trading the first week, except for maybe on day 5 if it's a new closing high. That didn't happen, and so far it's imploded and headed lower. Let's take a look at this one. This one's sort of interesting in here. It's above $30 a share, so I wouldn't necessarily take a pioneer pattern, but it does look okay in the fact that it took off and then has kind of a deep retracement, so that would go on my radar. This one's day 4, nothing to do there just yet. This is another one that hasn't really taken off just yet, but a new closing high. Notice day 2, a new closing high might be worth considering. So day 2 is the high for the week so far. 1, 2, 3, 4. 4 days of trading. So on day 5, if we close above this level here, it might be worth trading as a setup. So before you rush out and trade buy at B's, make sure you go back and look at some of the older shows. I've talked about IPOs quite a bit in previous shows, so check those out. That's all my time. If you want more information on IPOs, we do, in addition to looking at those older shows, we do often talk about them in the Facebook group. You do have to be at least a gold member for that. You can go to davelandry.com/members for more information on that. I want to thank everybody for watching, and may the trend be with you.